Okay, good morning, good evening all. Looks like a fairly light load in the room tonight, so with just under 50 members, it looks like there's maybe 12 or 15, 20 of you, so that's okay for the first session. So yes, it is true, I have internet. Um, Took a week, many apologies for that. We're going to run a quick webinar that goes through how to use Epic, the oil algo. I'm going to do this every night, not just how to use the algo, but any updates that are required, and also how I trade oil. So the three main topics are going to be, any updates needed for the room, how I trade oil, and how to use Epic, the oil algo. So really quick, why don't we do a couple quick updates here. So I sent out a memo, so if you didn't get it, let's just take a quick look at it here. These will be very informal evening webinars, by the way. These will be primarily for the purpose of our members that can't be in the room at the time to be able to review later. So basically my schedule going forward is going to be 12 midnight Eastern through to 4 p.m. Eastern every day. Well, with the exception of Friday night and Saturday night, of course, but Sunday night through Thursday night, so five days a week, 16 hours a day. That's my normal trading schedule anyway. And I typically get a little more time than that in, but that's what I can absolutely commit to. This weekend we're going to get our new moderators and interns and stuff going, so now that I can communicate properly. Lead trader notices. Let's see if my internet actually will. It's not my internet I'm concerned about, it's my there we go. Recently the whole website was moved to a new server, and for some reason, if you don't clear your cache, if you've been there before, depending on the browser, anyway, so this memo just walks through the fact, so this is on the blog under lead trader notices, just walks through the fact that now after a week I do have lightning speed internet, which is super cool. It seems to be decent. So like I just said, I'll be in the oil room from 4 p.m. Eastern to, from midnight Eastern each night until 4 p.m. Eastern each day. So the time period between when oil opens at midnight, the charting will be up there. So I didn't explain that, but I won't be in there. We're going to start the moderators and interns this weekend, so they'll cover the part of the day that I'm not in there. So the memo explains that. Then every evening for the foreseeable future in the oil room, it explains that I'll be doing training sessions. And now, of course, now that the internet's working, all of the reports that I'm behind on, we'll definitely get those up and updated. So that's the quick updates there. As far as members in the room, I want to keep it to under 50 until we get rolling in the room, because I can only handle so many questions a day. And I should have apologized in that memo. There's a number of DMs for our live trading room mainly that I haven't got back to. I'll have to apologize to those folks in the morning. Okay, so let's go through first of all how to trade Epic's chart model. So the way that this works is, first of all, what this is this is a chart representing an algorithmic model. So what does that mean? Well, traditional or conventional oil chart, well, this isn't exactly conventional, but it is. It's using conventional indicators. So this is USOIL WTI, so FX USOIL WTI chart. Conventional indicators being that there's a 200, a 100, a 50, and a 20 MA on there. There's some trend lines in here. There's some standard indicators, stochastic RSI, MACD, and a special proprietary one to TradingView that somebody has coded, squeeze momentum indicator down at the bottom, which by the way is very predictable and I use it often. These arrows on here are just noting important areas of trade. So basically, if you're a trader, you're aware of conventional charting. All we've done is we've taken conventional charting, conventional indicators, and conventional time cycles. So this is the daily chart. Time frames, not time cycles, but time frames. So 1 minute, 3 minute, 5, 15. So these time frames here that you see. So we've taken 60 months back historical data on 53 indicators on 10 different time frames. So if you multiply that out, you get about 30,000 calculations. So we took that historical data, we removed the anomalies from the data. So things like the war in Iraq, or something happens, 9/11, and we've taken those anomalies because those anomalies affect trade. Those short-term anomalies, that is. Pardon me. And we've taken those out of the calculations, and then we come to what we call an algorithm model, algorithmic modeling. So this is a chart. So we represent those results on a two-dimensional chart. Now the results are really four-dimensional, and then I won't explain that right now, but at the end of the day, this is a organic product with organic people, real live people that trade it, and it's got an organic or natural trading state, and that's what the goal is to represent that natural state. So what does that actually mean? Well, that means that you can come up with a algorithm, and the market uses algorithms now extensively. Now I'm not talking about a high frequency robot algorithm, I'm talking about a charting algorithm that does eventually go to coding. But first it's got to be tested. So Epochs has been out since, it's been about 8 months now, and it's gone through its testing and it works, we know that. From this point it goes into being coded by software. So that's a little bit about the history. You can find that history on the website by going to About, Our Story, Epoch Story more specifically, and the algorithm development process. So that's your history, how to actually use it. So in the Epoch reports, so if you go to the website, you go to the blog, you go to algorithmic charting reports, and you go to Epoch, you're going to find historical charts or previous charts that are unlocked, locked and unlocked. So when you get here, what you want to do, boy that loads fast, you want to, I'm just happy, right? Call me Gilligan. So here's a May 11th report. This is a typical report that our members get, and it explains the basics of how to use the algorithm model, provides for live charting, and it provides for what we're looking for in trade, and then some static charting and some follow-up information or previous information and that type of thing. So this is what those reports look like, and you can go back in those and take a look. I'll show you specifically on the chart now how to actually read this chart. So the number one way to trade this, or most predictable way, is with what we call resistance clusters. Now, a few of our members have asked for support clusters, and the short answer is yes. There are support clusters in algorithm models. Specific to the oil chart, there are none current. And that's kind of the concern with the current trade, is that there is no historical data that qualifies support clusters, which which is unfortunate on the Epoch charting. But that's just the reality. It's kind of new territory for oil trade. So history is being written. By the way, this is where you'll find, and where I found that is I went to Epochs Twitter feed. I just got to say this quick before I get into the charting. So Epoch, the algo, and so the technicians, there's 3 technicians that trade, that switch duty throughout the day, and they trade Epoch's algorithm. They don't make many trades, as you can see. This is in the last few months. Their performance is decent. Their account started at 100,000. They're at 150,000, I think, over 3 months. March, April. Yeah, that's exactly 3 months. So that's, going from 100 to 150 with a limited number of trades. They've done well, and I'll show you now how they've done that. So the number one most predictable way to trade this charting is what we call resistance. Our resistance clusters, or any clusters at all. I can't show you on this chart right now what those look like. You'd have to go into Epoch's charting, or even Epoch's, you know what, I bet you we could, at Epoch, the algo, let's see if we can find one. Cluster. Let's see if the internet will find one of these posts. You never know. The internet may have no, there's no real specific. So I'll have to go tomorrow night's webinar. I'll go in to Epoch's charting here, and I'll find the historical data on it. The reason I can't show you is we only chart the clusters when they're getting close to trade. In other words, there's no reason to keep charting clusters that are way above. Right now, I think they're around $52, around 52 on the oil chart, 52.30 or something like that. But the point is Epoch, if you go back into the reports and you read the reports, and we won't do that right now, you'll find that there are clusters overhead of resistance, significant clusters, and a few times oil has approached those clusters, and of course Epoch warned our members that there was a 1 in a gazillion chance of oil actually getting through those clusters. Well, sure enough, oil never did get through the clusters. They were tested, I think, twice in the last couple months, and so oil came off really hard anytime that I got anywhere near them. And I wish I had prepared and looked them up before I got on here tonight, but that's okay. I'll do it for tomorrow night. But that's the most predictable way to trade the charting. The second most predictable way, so we'll just have to kind of postpone that to tomorrow night. The second most predictable way is there's what we call wide area or wide range algorithmic model trading ranges. So what I mean by that is, if you look at this chart now, right now this charting is being rebalanced. What that means is about every 3 months we have to rebalance the actual trade of oil with TradingView's charting. There's some anomalies in the charting, and right now there's a divergence of about 6 to 8 cents. And so anyway, when you see oil not quite hit this support, so I'm going to explain the wide range support and resistance. It is possible that, see, look, support's saying here at about 43.97, 96, and price came down to, well, it's about a 3 cent, 4 cent difference. Could that be the anomaly that I'm talking about, the divergence in the charting? Could be. Don't assume it, but it could be. Here's another example of, what tells me it's just a little bit off. You see where that can, well, I won't get into the details of how to read these charts that specifically right now, but anyway, I see a divergence there of a couple cents. Anyway, so what do I mean by the second most predictable way to trade. And by the way, you guys can ask questions as you like if anybody's awake. I know it's late. It depends where you are in the world. So how it's represented on the chart, first of all, is it's a thick gray line. So this line here is support for the most recent trading range. You can see when support failed, what happened here earlier today. So that's support on the charting, and we provide this well in advance. We can actually provide the support and resistance endlessly in the future in advance. So in other words, if you ask me right now, 3 years from now, where's the support and resistance on this charting, I could provide it for you, because this is just at the end of the day, it's an algorithmic model. It's like a GPS, picture it like that. So near future, so future forward charting. It's not charting that's done after the fact, it's charting that's done in advance of trade. So it's like a GPS, it's like the road grid that trading goes through. So here's the resistance area. So the resistance area was at 47, 45-ish, and the support area is where it failed earlier today. So that's what I mean by a wide range trading area. Now our technicians that trade Epochs algorithm have been given authority up until now to trade our oil account on those support and resistance areas and those clusters, and the third area, which is the channels, and I'll show you that right away. And that's how they've traded with this performance over the last 3 months. Now that I'm going to be in the room with them, whichever technician's on duty is going to have authority to trade the other three ways, because there's six main ways to trade Epochs charting. So let's go back to the second way. So that's resistance, and this is a wide area support and resistance in the algorithmic model. So that support and resistance, that is not like conventional support and resistance, and we have that on the chart here too. That is algorithmic modeling that tells us where that support and resistance is, and you'll find it's incredibly predictable or actionable on oil trade. So let's take a look at where support was. So it was down here at 43.97-ish, and an earlier trade. By the way, I was in a trade up in here, and I was away, so I didn't mark it in the room or on the alerts, but I had a stop in right here. So I had a small loss there in oil today, but it was a small entry. But still, I mean, I got stopped out. I think I was in up here because I thought, well, you know what, support's here. It took off earlier in the day here, got up and going into this quadrant, and I'll explain those in a second. And then after I left my monitors, it failed that quadrant. You can see, so this is a quadrant line here that I'll explain shortly, and it was on its way to the target and it failed. Now I don't know if there's a piece of news out, but when it failed that quadrant, kaboom, then it failed. So here's the quadrant wall, this dotted line failed that, failed support down here, failed these purple lines are conventional support and resistance lines. Those horizontal lines are all conventional support and resistance. Failed the algorithm model's primary trading range support. Failed that yellow line there. Those yellow support and resistance lines are the most important support and resistance that are on here as far as conventional charting is concerned. And continued, so once it failed there, it just continued right through, and now it's into a new trading range. So where the support is in this new trading range, Epochs charting won't be out for a couple hours. I won't know until that charting's out. I mean, I could tell you, I could get into the charting of it and figure it out, but we may as well wait for that report to finish, and that'll be out soon. But so now this is the new resistance. So we provide those wide ranges, and that's where the most predictable trades have come from, and that's what's represented in a lot of these trades from what I understand. I haven't gone through every one of those trades to see what the technicians have been doing because I've been busy myself, and I didn't want to give them too much flexibility until I was in the room with them and they're trading. So there's 3 technicians. They switch duties 8 hours a day, and they're the ones that also help with the charting updates and running the algorithm calculations every day and that kind of jazz. Okay, so that's the second most important way. So there's the clusters, the resistance clusters that I can't show you, that I'll show you tomorrow because I gotta go and look them up. There is the wide frame support and resistance that are represented as gray lines. Then the third way is what we call channels. Now, the best way to picture the channels is if you picture conventional charting channels. Conventional charting channels tells you after trade has been there where the channel is. What this charting does is it shows you in advance of trade getting there where those channels are. So again, think GPS. So I'm going to show you an example of how this works. So I'm going to go to some historical because Epochs charting is getting updated tonight, so we're going to run into some of the roadmap or charting that just simply won't be there. Okay, so here's how the charting works. This is some historical charting. If you go too far back because of the way TradingView works and the rebalancing of the charting, it starts to get really sloppy and messy looking. Anyway, so before oil got into this range here, this channel was provided for. So there's one going down. So this here, this orange line, and this orange line, this is midline. Right here, this white line. So if you can picture a runway going down, this is the top of the channel, this is the bottom of the channel. This was provided before oil trade actually got into this area, so you can see how it came down, goes up, comes down through through the channel area. Now once it gets up and out of the channel, and now it's into the up channel option, so it starts getting up here. So the up channel is where this arrow is. So you see that purple arrow and this purple arrow? Well, these move around on the charting, so you have to be careful that you're reading a current chart. But anyway, because when you go historical back, it doesn't quite make as much sense. You'd have to read the current reports. But from that purple arrow to that purple arrow, so this orange line to this orange line, and this is midline, that's the up channel. So it left the down channel momentarily, got into the target for Tuesday at 4:30, and would have got near the target for Wednesday. I think the target would have been up at here, and then it dropped out of the channel. So basically it was going down channel, and that channel was there in advance of trade getting there. Then it started going up channel, that channel was there in advance of trade getting there. And it's not a very good example because there's not much of a time frame here to see how it trades in the channels, but you can go through Epochs reports. And then what happens every week, Tuesday at 10:30 is when one of the targets are. So there's 3 targets, and we'll get into those in a second, or in a few minutes. Tuesday at 4:30 Eastern, Wednesday at 10:30, and Friday at 1 o'clock Eastern are when there's targets. And I'll explain those in a minute. But the important part is with the channels, the channel decision between oil going up or oil going down is always at Wednesday at 10:30. So when the EIA report comes out, and I find that very curious how they coincide, but they do, and that wasn't by design. That's just the way it worked out. So most of my personal trades are in and around that time, because once it confirms, you see how oil, right at the report time, so this was at 10:30, boom, right, because this is the last possible decision point right there at 10:30 for oil to make its move up the channel or continue its way down the channel. This is where the gold is. This is where the green is, where the money is, because you can then say to yourself, okay, now it's going down channel or now it's going up channel, and then you can trade accordingly. That's a super predictable way to trade. So I'm going to be trading that a lot live in the room, and you'll see how that helps. Now when you're say going up channel, so let's take a look at this for a second. So this was kind of like a deke out, right, where oil got into the up channel, and you always got to remember that Tuesday, well, that Tuesday at 4:30 and that Wednesday at 10:30, man, things can change quick. So it gets up into the channel, and you can see how it's testing support here, because this is the outside wall of the down channel, right? The down channel, this is the midline over here. This is the upper resistance, or becomes support. So you can see how oil gets up in here. These are fib lines, these horizontal red lines. The various colored horizontal lines are fib lines, and then there's support and resistance, which are purple or yellow, conventional support and resistance lines from previous times. I'll explain those right away too. But anyway, so oil gets up in here, hits the fibs, bounces in between the channel wall or quadrant wall, and I'll explain those in a few minutes. So oil's trading in between them, comes down into the test area. Now how this works is, for the down channel, so this is the midline. I always go back to the midline because that's the easiest way to picture your channel. So that's the midline. On the way down, this is your resistance line. That's the channel wall. Well, once oil makes its decision to go up, what you have to understand is this line here that was previously resistance for the downward channel now becomes support, but it's not the ultimate support for the up channel. It's actually this line right here. This is now the bottom of that upward channel. So you can see how oil trades at this line support, failed it, came down at here, trades in between, gets back up on support. Now understand, all these lines are there in advance. So like conventional charting, the lines get charted after the fact, right? These are in advance. So comes down here, actually a little bit of a fake down in here, the fib lines, catches at the fib lines, boom, into the Tuesday 4:30 report, right into the target, falls out immediately, back to support. So you can kind of see, right, how oil trades inside of this GPS. Gets up into the fibs, back down, gets up into, I think the target would have been up in here for that time. Just about gets into what would have been the target there. These targets and stuff, when you go back into the charting, it's bad to do that because things get moved around and deleted and stuff like that. You have to look at Epochs actual reports to see where the target would have been for that day, but I'm sure it would have been there. And boom, it comes down, and here's the big news for the day. So then it loses because its decision is at that. This is just like an intersection on a GPS. It's got to stay going up channel by 10:30 Tuesday morning, or it's got to go down channel. And no other charting can provide that for traders. Well, all of this is proprietary. So anyway, it goes down, it chooses the down channel, and these purple arrows are kind of like your direction arrows, like street signs. I guess is the best way to put them, to explain them. Gets into the down channel. So then we look at the down channel, and it gets into the target in the down channel for the day, and then it continues down. So where's the support and resistance in this down channel? Well, the down channel is here, that's resistance now, and here is support. Now you'll find this line, we call this the test line, and this line will act as support and resistance also, and this is your midline. So down it goes into the downward channel, and doesn't stay there for long. It kind of psychs out here. So here's where it has an opportunity to go up the channel again, right? And sure enough, it takes the opportunity and fails. And this is kind of typical. So you got to be careful with those, those areas. And then it continues down channel. You see how it uses that as resistance. And then earlier today, when I was out, it fails the up channel test. It started to get it into the up channel, and then boom. And that's very typical if it's going to continue up or down. Now it left a little early this time. It normally waits until that Wednesday at 10:30, like I was saying before in this region. It left really early. So Does it still have an opportunity to recover into the up channel? It sure does, until 10:30 tomorrow morning. Even 12 o'clock, I think it's showing there. So you got to be careful with that too. I said it every time. I shouldn't say that because I don't know if it's every time. I'd have to look at the, the historical to see if that decision is actually every 10:30 every Wednesday. Okay, so I've covered 3 different ways to trade so far. Or to use the model. So once you're in the, I'll just review really quick. Once you're in that down channel, then you use this as resistance. And now here's an example of when you get the refresh charting. See, that bottom channel wall isn't even there yet. When the charting goes out tonight, that'll be there. But you already know, because this is the nature of the model, that the absolute resistance or support for this channel is right about there. Anyway, the point is, when it gets to the bottom of the channel, you'll see our technicians trade long, and when it gets to the top of the channel resistance, you'll see our technicians trade short. If they aren't taking those trades, unfortunately they won't be able to explain them to you because they're just instructed to post their trades. But as far as myself as a trader, I'll explain my trades. So you'll see 2 different kinds of trades in the room, and on the live alert feed on Twitter, you'll see my trades, and I'll explain them till you guys need me to, as long as you need me to. And the technician trades. The technician trades are specific to the protocol that they've been given, which is what I'm showing you right now. Actually, they've been given the same protocol. They watch the same videos that are available on YouTube, have the same information, identical that I'm giving you here. So those are the top 3 ways to use the charting, and I'll explain the 4th, 5th, and 6th way now. So the other way to use the charting are on what we call quadrants. So the way to visualize this is best like this. Well, actually, you know what? The bottom of that quadrant's not there yet because of the refresh charting. So let me bring up one from recent time here. Oh yeah, we've been in this down channel. Okay. Wow, that's been a while, hey, for oil. Oil producing countries like my homeland, Canada, boy, deep trouble financially because of this. I come from a specific area of Canada that's completely oil related. And, $43 oil in the oil sands in Alberta, Canada is barely half of what they need. They need 60 to break even. $43 is a very bad situation for them. Okay, so this is an example of what these quadrants look like. Now you look at that and go, what is he talking about? I don't know if you can see a baseball diamond in this, but there's one there. So if you look, it goes up there, and my cursor's off the screen, and then it comes down here, cursor's off the screen, comes down here, cursor's off the screen at the bottom, and then it goes up here. And then right here is that test line I was talking about. So that is a 30-minute quadrant. Well, not true actually. It's a larger quadrant than 30 minutes. The 30 minutes is represented, and that doesn't mean it's 30 minutes in time. It's a 30-minute quadrant on it's a quadrant on a 30-minute chart. So this is a 30-minute chart. So here is what we refer to as a 30-minute quadrant right here. There's 4 of them that make up each of what we call the master quadrant. So there's some language here, but you don't have to worry about that. Every one of these lines is support and resistance is the bottom line. You just have to learn which ones are more important than the others. And I'm going to show you how you trade with conventional charting and your algorithmic model charting for an edge. So these quadrants, so here's one here, there's another one there, another one there, and another one there. And you're going to find this charting is made up of these, period. So if you go to here, to the website, you go to About, you go to Algorithmic development process, and then you scroll down and you look here on the development process itself, TED.com. So there's a video there that you should really watch. The reason you should watch it is the discipline that they use. So this is the mathematician that cracked Wall Street. This is the Jim Simmons interview. It explains, in brief, what you're seeing on this chart. So this discipline, so you see this diamond shape or baseball field shape, the whole chart is made up of these. Now, how can we figure out in advance that oil is going to trade inside of this state? Let's put it that way. We can't tell you if this is a result of so many of the largest funds in the world are now traded with algorithms, or this is just natural state. In other words, similar to Fibonacci math, right? Now, Fibonacci math is one of the indicators, the 53 indicators that we use in this charting, and it's represented heavily in our charting. But anyway, the point is that that's where these shapes come from, and that's explained in that video that I just showed you. So quadrants, so trading quadrants. Let's give you an example, a historical example. So oil's crashing through here, it goes through a bunch of fibs, goes through a quadrant wall. Now, one of the traders I was working with, coaching and showing him how to trade this, he said to me, if I took that chart, instead of it being vertical and I laid it on its side, so now it's horizontal, that makes more sense to me. And I picture a mouse going through a maze. So this is actually a wall for the mouse. That's a wall for the mouse. That's a wall for the mouse. That's a wall for the mouse. It's a neat way to kind of put it, right? The point is trade comes down to this support area, fails it a little bit, catches it, and then starts trading inside of this quadrant right here, right? So as it's trading in between this quadrant, every time it gets to the support area, if you took a long every single time and a short every single time it worked its way here, you'd be fine. Now the problem is, so these are fibs, right? The red line and the blue line. So the fib resistance there is a little harder to catch as a short than the long at the quadrant wall. So that's not like super predictable trade. You'll find that trade will get really predictable at times where it hits the quadrant support, hits the resistance, hits the support, hits the resistance, and you can bounce around inside of the quadrants. You have to be much more skilled or know how to use this, or have more experience with it really over time to learn how to do that. So what I do when I'm trading on these tight time frames is every one of these lines becomes support and resistance, and I high frequency trade. In other words, I'm in and out, in and out. It's actually more like ebb and flow. So I do it in tenths, so 1/10 size, and if it confirms over the next resistance, I go into 2 or 3 more tenths size, and that kind of thing. Then I'll trail at resistance. So it's like an ebb and flow through my trading session. That's another way to do it, and that's what I'm going to be doing in the room with you guys. So this evening I probably won't get much trading in, but over the next couple days I'll start high frequency trading, and I got to get caught up on my reporting and stuff like that now that I have internet. But you can see here, so typically you'll see the tail of the candle, underneath, and the main body of the candle right at the support and resistance. Now when it got in here, it got a little bit messy, failed in here, natural support up. This is a little messy because oil's under pressure, and you'll find that. So when oil's not trending, it'll be a little messy, and these aren't great examples, but you can see how it gets up into this quadrant here, gets up into that resistance, and then comes off, gets up into that resistance, comes off, gets back down to support, gets up into the resistance of the quadrant, comes off, fails a quadrant, and you're good to go until there, fails. So you see, that's basically how that works. That's quadrant trading, and until you've actually done it and you've got some experience in it, it's not easy. That's why it's the 4th most predictable way. Okay, the other way to trade this is really I guess there's 7 ways. I hope I haven't got any of these out of order. The other way to trade Epochs model is the targets. Let's go into those really quick. So I think officially that's the 6th way, most predictable way, but that's okay. These are all going to be very informal for some time, so I'm not too concerned about. And by the way, I'm the math person that figured out that oil trades in this model. So if I don't know exactly, you get an idea, right? It's fluid. Okay, so targets, how they work. So if you look at the bottom of the chart, you'll see this is a Friday, 1 o'clock, and you'll see that this is a Tuesday at 10:30. No, sorry, Tuesday at 4:30. And I always misstate that. So Tuesday at 4:30 and Wednesday at 10:30. So these were targets represented on the chart for this week. These 2 targets that missed. Oil failed earlier today. Now, had oil not failed, it was on its way to the target, and we had through the algorithm put a prediction together that this would be the next target. It didn't, it failed, so there'll be refreshed targets underneath. Typically there's 2 targets each day. Those targets, don't trade those targets, use them more as for fun. When and for fun I mean observational fun, right? As a data geek, for me that's fun. But the point is that once oil trade gets really predictable, up channel or down channel, those targets get super predictable too. But lately oil broad range has been in a sideways trading pattern. These targets have not been predictable, and our reports tell you very specifically when they are predictable. When they get predictable, they're near 100%. When they're not predictable, Epochs reports tell you pull back on them. Right now they are not predictable at all. However, we expect that they will be again here very soon, and it's funny how we can start to predict that part, so we can actually start to predict when those targets are going to be predictable. The point is, it's not the primary way to trade Epoch, but when they are predictable, you can definitely use them, and some of my biggest wins have been from that. The clusters are the biggest wins, though, to be quite frank with you. Broad range, support and resistance, and channels, much better. The first 3 ways I explained there. For intraday trading, yes, you can trade inside of the quadrants, and they're pretty good too. So those are the targets, and then the other way to trade it is the support and resistance lines. So there's fib support and resistance lines and conventional support and resistance. So all of them are fib lines, Fibonacci lines, except for the purple ones. These are the horizontal lines I'm referring to, and the yellow lines. The yellow lines are simply coded a different color so that traders know easily that there's major support or resistance. So you can see how oil trade got up near this yellow line and fell off here. The purple ones are conventional support and resistance. They're just not really heavy duty. And then you got the fib lines here. So the fib lines are like the red, the blues, the yellows. They'll be different colors on the chart. Now, can you trade those confidently? Yeah, you actually can. But there are times, like see it got up to the fib line resistance and then worked back to the quadrant wall and then straight up to the quadrant wall, and it just ignored the fib line. So those are the main ways to trade the algorithm charting. I'm going to do video specifically when I start trading that explains why I'm doing each trade, right? So the setup that I'm watching, and so when I do those trades, what I'm going to do, so here's current trade right now. So here's the quadrant it's in. So this is the top of the quadrant. This is the wall here, the bottom, the other wall, and back up there. And oil's almost dead center in the middle of that quadrant right now. what I'm going to do is when we've got the oil report for the night published and all the charting's refreshed, I'm going to come back into the room and I'm going to produce a video specifically for how I trade these quadrants intraday, and maybe we'll get a trade in tonight. So I'll see you guys in about an hour or two once I have all the charting refreshed, and then we'll do some trading. If you're not in the room, don't worry about it, because of course it'll be available on video and I'm going to send it out to the members. So thanks for listening, and I'll see you in a couple hours, and we'll maybe get some trades in here and I'll explain how I trade these quadrants on the intraday. See you in a bit.